All right, everybody, it's Trendy John from Simpler Trading. Good morning, good afternoon. Welcome, right? I have just come back from the country of Mexico. I think I've had enough tacos to survive the next several Taco Tuesdays coming up. But also on top of that, it's so great to be back in the hear me, sunny state of Florida because almost my entire trip was underneath rain. But we made the best of it. We have a lot of memories, a lot of things that we will always cherish and look back. And at the end of the day, we were with best friends and with family, and I couldn't ask for anything more. But now I'm back with my family here at Simpler Trading, and I'm very excited to be here. Um, First of all, thank you so much for having an amazing time. And also, I see that you guys had some amazing trades, and we know that. Melissa's really good at what she does. Um, and I want to say thank you and welcome to anybody that's brand new that I might have missed in this past week. So, this week we'll be doing the broad market analysis, and I will be covering the full week because I know that you guys had some time off last week on Wednesday. But starting tonight, futures will open here in about 45 minutes or so. And then we are pushing all the way through until the 28th. And now, this marks the end of the quarter. So I think I could be wrong. If Melissa listens to this, she'll answer. But I think I might have lost the competition. I think I said in this quarter that we would see a big pullback, and that would cause a lot of fear. But we'll talk about that a little bit later on the skew. So what that means, that competition means I have to go down south with Ashley, and we have to go visit Melissa. And if I would have won, she would have had to come up north in Florida and come see us. Either way, I think it's a win win situation. Let's go ahead and get started with this week. The first thing that we'll be discussing is coming right over here. And I want to give you a quick introduction into. If you're brand new. So we had the morning trend. I always want you to come here first thing in the morning. Check this out. It's usually updated about 45 minutes to an hour before the market opens. And then over here, this is exactly what we're doing right now. BMA stands for Broad Market Analysis. And then we have our educational videos. We also have our dashboard. So make sure you go to the Trendy dashboard, which is part of your room here, and you'll see a lot more videos there as well. Our 2024 outlook, we did this back in December, January timeframe. We are also going to be holding an happy hour coming up either this week, most likely another week or so that we can see how those charts did and what we're looking forward to into the last 6 months of the year. And then if you're new to Trendy, please check this out. This is where I update our charts for the futures, ES, NASDAQ, YM futures, RTY futures. Sometimes you'll see oil in there and gold or something like that. If you want to see that, just ask in the morning. And then you have Melissa's swing and watches, our API alerts. Please read right here so that you understand why or what the API alerts mean. They're very, very important to our overall transparency here in the Trendy Trading Room. And then, of course, welcome. And then you get to come over here and see my open positions, which I need to update most likely tonight or early in the morning. So let's go ahead and get started. We're going to click right here on BMA. The first thing we're going to talk about is this week's U.S. economic reports and Fed speakers. So these are catalysts in the market. All right. Any of these catalysts can cause volatility in the market. Now, because we are supply and demand traders, we are already identifying the zones or the levels in advance. That's what gives us the edge in the market. We are aligning ourselves with the bigger money by using structure, Fibonacci, EMA clouds, all the special things that we taught you in your class. Okay. And then these things, what they do, if you would, just imagine like a dial, all right, or like miles per hour, 0 to 100, right? Most of the time, the market is going somewhere between like 25 to 40 miles an hour. Well, when these catalysts come into the market, all of a sudden they're pressing the gas, that volatility goes up, and prices are moving a lot faster. Imagine 70 to 100. But the thing is, the levels don't change. Where we are aligning ourselves do not change. Price just gets there in a lot faster manner. That's all. All right. So, again, when I go over these with you, it's not to tell you to sit on your hands, it's to make you excited. But I need you to understand when these times come out so we'll be prepared. So, Monday, 3 o'clock a.m., Christopher Waller, speech in Rome. 8:30, and these are Eastern time, everyone. Chicago Fed President Austin Goolsbee, San Francisco Fed President Mary Daly at 2. Tuesday, Fed Governor S&P Schiller, Consumer Confidence, Fed Governor, a lot of Fed heads so far. Consumer Confidence coming in at 10 o'clock on Tuesday. Wednesday, new home sales, pretty quiet so far. Thursday, initial jobless claims at 8:30. GDP, big, some good catalysts there that I would imagine can cause a little bit of movement in the market on that beautiful Friday eve of the 27th. Durable goods, pending home sales. And then on Friday, another Fed head speaking, personal income, PCE, core PCE, consumer sentiment, and then another Fed head. All right. And that's it. Earnings coming on down here. I love using earning whispers. If you guys don't know, if you go out on X, formerly known as Twitter, you can just look up this tag here, and this handle here puts out all the earnings. And you can see it's coming into a more slow period. But one thing that I do want to note are some of the names that I'm interested in, like Carnival. How are they doing? FedEx, I feel like they've been pretty quiet this year, so I'm a little interested. MU Micron bit on a tear this year. Take a look at it. We'll be looking for levels if you want them going into earnings. If you're interested in an earnings play, reach out to me during that week. On Thursday, very, very important. I put a note here. I'm in long-term options in Nike. I bought in at 847. They're currently going for 1047 an option, meaning 847, currently going at $1,000.47. Okay. So is it up a lot? No, it's like 24% or something like that. And they do have earnings. Do I want to hold into earnings? Now, typically, I would say with 180 DTE, which is what I had, that means days till expiration, long time. I would most likely hold, but it is a higher delta. And because of that, I think most likely what I'll do is close before earnings on Thursday after the close. And I'll most likely buy some sort of debit spread on the call side for a long term. And if I'm right, what I'll do is just buy back the short side of that spread and then stay in that long position just like I was doing. Okay. So just kind of make anyone aware of that might have like that set up and happen to be in it as well. Moving on down, big news on the SPY and QQQ neutral strategy. I'm no longer going to construct these. I will possibly replace this with one or two of my favorite weekly setups going into the future, not this week. I'm not going to do it now because I just don't have a solid plan. But there's not a reason, like a bad reason why I don't want to do this. It's because I've been doing it for almost a decade. And to be quite honest with you guys, um, I just don't think enough people talk about it. I know that a long time ago on YouTube, I asked, "Hey guys, how much do you love the neutral strategy?" And I had so many people that love using it. But the cool thing is you have a video out there that teaches you how I do it. You could put these together yourself, but they take a lot of time on my side, and I really just want to concentrate on really fine tuning, making things a little bit shorter because we give so much here. I mean, futures trading, right? Options trading, equity trading, neutral strategy, your PMZ strategy, your supply and demand strategy. You got a lot of stuff going on. And so, what I'm trying to do is just kind of expedite the process and doing these broad market analysis, make them nice and quick. This one will be a little bit longer because I'm talking a little bit more. I missed you guys. I was in Mexico. But we are going to go ahead and I'm going to X that out. All right. So again, the videos won't go anywhere. If you guys want to learn how to put those together, please do that on your own. Other than that, that is my plan for right now. Now let's go ahead and move over into Trading View. Trading View, I'm going to pull this up and show you the bigger picture of the SPY. All right, so we're going to come over here. And when I say bigger picture, I'm talking about the quarterly. All right, so on TradingView, that's going to be this thing right up here that says 3M, 3 months. Funny how they put that on there. And let's go ahead and get my notes. Not a lot of important notes. But, did I notice anything significant coming back from Mexico? Not really. I mean, we made a new higher high. What's new? We have these are called three white soldiers. Been talking about those for a very long time. Matter of fact, I brought them up a long time ago, letting you know that this is a very bullish setup. Um, and it was super bullish. Matter of fact, once we started to move up from the inside and up, we came back and checked the 9 EMA of the quarterly, and things really didn't look back from 426 all the way up into its last target around 550. Big moves. Far as this week is concerned, very important. This is the end of the quarter, guys. Right here, it's letting us know that we only have about 5 days left, 4 days and 23 hours. Um, looks like a very high chance we're going to close on this formation, which is again super bullish. Price would have to fall under $523 in order to negate what I'm talking about. I think it's pretty safe to say, but you never know. You never know. Disclaimer. It would have to fall under 523 in order for me to be wrong that we are going to close out this quarter on three white soldiers. Okay, so things look pretty bullish. My overall sentiment is look for those lower zones to buy. And we'll be looking at a couple names this week that look like bullish setups and so forth, to include the SPY and the QQQ. Okay, so let's go ahead and move on. We're going to go into the Qs. And same thing, guys. Three white soldiers. You can see it very bullish. Same thing I said here. You have 4 days and 23 hours. When I wrote this in, it was 5 days, but it has changed. And very high chance we stay on here unless we fall under 444. And again, guys, disclaimer, I'm always open. And I'm very much open to some sort of huge sell-off. Not that I'm bearish or anything. I would just like to see a bigger sell rack, a clearance rack, if you will. So, hey, keep your mind open. Anything can happen. A couple things I noted, and I really didn't. I hardly looked at anything when I was gone. I think I looked at the market maybe one time. Um, we came up and hit my extended target, which was 486. I used Fibonacci extensions for that. Because we made new higher highs, we have a different support. This is more of your longer term, mid-term support around 452 to 431, and then your demand zone that's way down here at 387 by about 300 and some change. Okay, so nothing really changed here. Again, guys, 4 days, 23 until we get there, and then the next thing that I want to be looking at is the dollar. So what has the dollar done? I mean, in my opinion, you want to be looking at the dollar. Um, on this chart, you can look at it from this perspective if you want. Here's a quarterly. It's going inside and up, but it's heading into supply. That same supply has been working for months for us. I'm going to bring you into a smaller time frame just so you can kind of see what's happening here. Is that we're rotating up. It's a nice rounding bottom. If I were in a stock, I'd be super bullish on this as long as price is staying above this cloud right here, and that's exactly what the dollar is doing. However, you'll note that the supply zone that was created way back in the day. Let me come over here and show you. Way back in here, this time frame, November 2022, hit it, and 1 year later, we hit it again this year. We pull back. We're just basically headed back into a level where the dollar has a really hard time. If for some reason the dollar actually starts to get up and over this 106.55 or so, then I would be a little I would be a lot more, sorry, cautious than what you have been. Now, the distance between current price of the dollar and where this rejection spot is tells me if it can continue up, the market could pull back a little bit more. So maybe like a day, day and a half before we actually find buyers in the market again. Okay. So if you think about it, again, if the dollar's moving up, a lot of times the market starts to pull back. But when it comes into supply, then we expect it to reject. Well, if the dollar is going to reject in this area, then we expect the market then to move up again. So I'm looking at the space between these two and gauging, well, how long would that take? So again, if we were to push up there, it could be a day and a half um, before you start to see some bids come into the market. And when I say bids, I mean buyers looking for the market to move up. Nothing really other than that, except that the dollar is supported down here around 105.31. So if we get a pullback, market's going up, but I would expect it to get pretty choppy as the dollar could find buyers around that 105.3. Okay. All right, so that's the DXY. Going to move into the TNX or the 10-year Treasury and take a look there. Came down into some demand, started to pop up a little bit, but overall, it's just kind of chilling down here at 4.25. It's staying within our zones. I went to a little bit different time frame and found, I think it was on the 4 hour or the daily, a little bit of demand around here. As long as it stays underneath the cloud, I wouldn't be too concerned about the Treasury unless it starts to push over 4.4. For right now, it looks like it could hit resistance, come back down. And so that's what I'm seeing here. Okay. The next thing that I want to be looking at is we're going to come over into the skew. All right. So let's take a look at the skew. And the skew is at 151, which is super high, which means, you need to be cautious. It can push up even more, but I would say be cautious because it is at those levels. Now, I put a box on it for you guys to understand. As long as price is in here, the market's staying bullish. Anytime it comes down to this lower line at around 133, 137, somewhere in there, buy calls 5 to 10 days out. It's not until we close 2 weeks underneath this that I would start to be concerned for the market. For a pullback, I again stop talking about the competition I had with Melissa. Um, I was saying that in quarter 2 we could see prices come down to here or the skew come down to here, and that would be my huge buying opportunity. It's just not happening, guys. As I've said many, many times, it's the same. It's the repeat of 2021, where a lot of signs were saying, hey, the market should probably pull back, but it just wouldn't. It continued to melt up. And if you continue to be too cautious week to week, you just kind of found yourself, feeling like, oh man, it's kind of like Nvidia, right? It's like, can it really keep going up? And it just keeps going up and keeps going up. Don't let the market do that to you. Just have fun. Try to take it from a week to week basis. Keep your eye on the quarterly, just like we've been doing. I think everything's going to be fine. Let's go ahead and move down. The fear and greed index is at 41 this week, so it dropped a little bit into the fear section. Just understand that basically fear means that people are starting to say, hey, things are starting to show a little bit of a top, temporarily. And so, people are being a little bit more fear. And that's what that fear and greed looks like right there. Okay. Now let's talk about the futures. I'm going to go back over to Thinkorswim, go into what now. Since I was gone, they had a contract rollover and the ESU M24, which really it shows a gap in the market. That's where that came from. A couple things. I gave you two different charts to look at. I'm going to bring these down. Hopefully, you guys can see the numbers on this. I feel like you can, at least from my angle. If you first started tuning in on YouTube, it takes about, I don't know, maybe 3 minutes. At first it looks fuzzy and then it should, you know, calibrate into what or buffer into what your settings are. So you shouldn't have any problem seeing this stuff. But over here, I have fib extension targets. We have weekly demand zones that I identified on the chart for you. So please note where those are. Basically, what I'm saying is if we get a pullback into here, this is where I'd be looking to buy from a weekly standpoint. If you're buying from a weekly standpoint, you got to give it a week to work out. You can't expect it to work right away, but these are the areas I would expect bounces where the green is. Now, up here it says fib extension targets. These are levels that I'm using by using Fibonacci extension to the upside. All right. All right, so next thing I'm going to come in here. I want to show you two different things. So this was ES futures on a weekly, and then this is the same chart but using Fibonacci's. And what I'm trying to show you here is the correlation between Fibonacci's and our demand zones. You'll notice if you use the Fibonacci that I teach you, it makes sense. The 38.2 is lined up with that double inside and up. We got a lot of confluence there. We also have a 9 EMA there. A lot of reasons why I'd want to buy in that green box if we were to get that pullback. The daily, this is for anyone that's looking for, trades that last anywhere from 1 to 3 days. These are my trigger longs. This is my resistance point. I'm just using the trendy edges there. And then I have a short trigger, which I use Fibonacci extensions to come up with that number. Okay. So again, we use different things to get long or short on using these levels. Come in the room, sign up for a trial if you're interested. I'm going to teach you how to use these triggers to get into trades. Next thing I'm going to use is the 4 hour. Now notice here I put 4 hour 225-minute, and the 30-minute, whatever it takes to find your zone, guys. And I've taught you all this in the classes. This up here is a 225-minute supply zone. But you can see we also have trendy edges in there. So again, those trendy edges making it a lot more convenient for you to be able to take a trade. And then down here we have a 30-minute buy zone or demand zone. This is where I'd expect buyers to show up if we were to pull back into that area. And that's just going to be your 4-hour chart. On the NASDAQ, weekly contract rollover explains the gap. Two charts here, one finding the zones, and then two applying Fibonacci's. You guys can see here from a weekly standpoint, we have the inside and up. It was tested. This was a great place to go long. These are your Fibonacci extensions to the upside. And if we scroll down, I showed it with Fibonacci's on it. You can see right here, we have a lot of confluence at the 23.6. This is going to be your support, guys, 18,925. The top and wick tells you to be cautious. We saw that in NVIDIA as well going into the end of the week. And these up here are my fib extensions, just in case things kind of roll to the upside, right? We get that rounding bottom and we just take off and make new highs again. These are going to be those fib extension numbers to the upside. Again, I really like the confluence going into the rest of the week and or the quarter. I don't believe that we would close under 18,925, but just in case we come down to there, it'd be a great buying opportunity in my opinion. Okay. All right, so the next thing is looking at the daily. Again, guys, short trigger, your resistance, and your long triggers, same thing as the ES. You could just pause this here and put these levels on your charts. Also, guys, I know it's towards the end of the video, but don't forget to like the video, give us a thumbs up. I appreciate you. Thanks for taking time out on your Sunday to watch my video and listen to me. But, this is what I love to do, and I'm just happy you guys are here. The 2-hour plus 20-minute, whatever it takes to find the zones, this is what we're using. These are charts that we'll go back to in reference just in case prices do pull back. Now, if for some reason, this one's a little bit different. If you notice on the ES futures, we had not come down to the 20 or 30-minute zone, but here we have, and we tested it several times. Bulls on the NASDAQ side. You want to see, I got a turn signal on Friday, so we should see a pop on the open perhaps, but if not, if this thing breaks down, be careful. I'd be looking for prices to potentially go to 19,700 by 19,500, somewhere in that area right there. Okay. Next thing we're going to be looking at is the VIX. I brought this up several weeks ago. This is an old chart. We were possibly in an area where volatility could be coming in. A lot of things, in my opinion, say that we need to pull back, but I feel like I've been saying that over and over. But we primarily are trading calls every week. I do have a short position on in NVIDIA, and it's actually positive now. My only regret during Mexico about trading was that I didn't realize we had went against me and I could have added into the trade and did very, very well. But I'm basically at a break even. It'd be really interesting. I think my focus this week, I'm going to make it really simple. It's going to be like your main uh, names like Apple, Google, Netflix, Amazon, Tesla. I'm just going to keep it really simple. And then, as always, we'll have Melissa as well to look at what she's looking for as far as PMZ trades go. I really appreciate you guys. We'll see you in the morning. Happy to be back. Can't wait to trade with you. Have a great day.